Hi everyone, welcome to Tuesday. And of course, every Tuesday we take a look at the performance of the New Zealand main board, being the NZSX 50. Before I jump across and share my screen, just that housekeeping rules, and that is that this is intended for educational purposes only, definitely not personalised financial advice. For that, you do need to go and have a chat to your own financial advisor. If, however, you're wanting to learn more about the share markets and how to invest, that sort of thing, by all means, reach out. Happy to help, happy to do what I can. And also, if you're wanting me to do a share and review, happy to do that as well. Just leave your comments below and I try to respond to all of them. So let's take a look. As you can see here, I have got the NZSX 50 up on the board. Now, I'm recording this on Monday afternoon, so the market is open, and you can see by that little red candle there, that is the transactions for today, being Monday the 15th of September. So the market's down about $67 or about 0.5%. Now, let's just have a look at last week. Last week, we can see here we've got this really tiny little doji. So the market never really went anywhere. It did close marginally up for the week last week, but it was very, very insignificant. And in fact, if I hold my cursor over it, you can see that for the week, it had a high of 13,314 and it had a low of 13,162. And it closed at 13,227. So not a lot of movement going on there at all. Now, a doji like that can sometimes indicate potentially that the market could go further. Only time will tell. I'm certainly not into guessing tops and bottoms or anything like that. I've mentioned it before, the little dashed line is obviously where the market's trading at today, but it is forming a little bit of a resistance line there. So the more times we can touch that, the more likely it is going to be that the market will break through that. It's obviously not set in stone, but that is what can happen. Let's pop our moving averages on and just see how things are looking there. So like normal, I use the 30-week exponential moving average, and you can see here that the market is trading above that, which is a good sign. We'll also pop on the 15-period moving average. Again, change that to exponential. We'll change the color on that one to make it a little bit easier to see. And this is good as well. The market's trading above both the 30 and 15-week moving average. They crossed sort of somewhere around June this year, which is good. Let's just go and take a look at the daily charts just to see how that's looking. And as you can see here, obviously that very last candle is today, is Monday. However, we've got 2 days in a row last week, so Thursday, Friday last week, where the market actually closed below where it opened the previous day. So for me, that means that I'm automatically not going to look for any new potential buying opportunities. I want to make sure that whilst red candles are okay, I've spoken of this before, it's a bit like breathing. You can't keep breathing out all the time. You've got to take a breath in. To me, that's where we might see the market dip down. But if we're starting to see a few more red candles come in rather than green ones, then that potentially is a warning sign. The other thing that is a little warning sign for me on this particular chart is you can see that both of those moving averages, they've almost crested like a little bit of a hill. Now, they could crest it and then rise again, and a good example of that is through this period here, which was earlier around May this year. You can see that it did have a little bit of a dip, and then it carried on. And then also through this period, which again was towards the end of May, it definitely fell down, then it rallied. Okay, so that's something that we do want to keep an eye on. The other thing as well is the RSI down the bottom, which is the relative strength indicator, and it just indicates pretty much whether a share is overbought or oversold. So as you can see, it's trading at around that 54.8 mark. The thing with it is that it's pointing down. Okay, so that could potentially mean that the market could move down a little bit more. It's not set in stone, but these are just little warning flags that I tend to look at when I'm evaluating a share, just to see how it's actually going. Let's go back to that 5-year chart. Obviously, markets can continue to rally, which is what we're really hoping for in this example. If I look down the bottom here with our volume, you can see that whilst the overall market for the close of Friday last week was up, the volume has come off a little bit. And you can see that by that little dip in that green candle down the bottom. It's a little bit lower than what it has been for the previous 3 weeks. It's not something to get too concerned about at this stage. If it was a red one, or if these ones were lower but green, then it means that basically the buyers are starting to peter out. So we do want to see some good, strong volume, but with the market performing to the upside is something that we want to have a look at. Now, I'll just take these moving averages off. And what I'm going to do is have a look to see how the main board is comparing against one of the Smartshares investments, which is basically the top 50 companies, but it has roughly an equal weight. It only has about 5% exposure to the overall market, whereas obviously this one, being the main board, certainly has a large weighting to some of those capital index stocks, the likes of the Sparks and the likes. So we'll pop FNZ. Here it is. And you can see here that it is underperforming the main board. So again, what that's indicating is that what is driving our NZSX 50 is a handful of shares. We're not having a lot of good participation with a lot more shares. It's just a handful that is driving this. And so that's something that we want to keep an eye on. If I look back here, and I've shown you this before, we look around sort of February 2021, you can see that that blue line was trading above the performance of the NZSX 50. Even when it started to drop, it was still outperforming. But then it changed. It changed sort of around December, January 22, 23. And ever since, it's actually been a laggard. So we're not seeing most of our companies that make up the NZSX 50, we're not seeing most of them participating in this strong rally. Why? Who knows? But that can be an indicator as well as to how strong the market is. So at this stage, what I'm saying is that our market is really just relying on a handful of stocks to drive it. So we want to see more of those companies participating in this to actually start driving our market at the moment. So for me, this week, I'm certainly not looking at any new buying opportunities. Like I just said, it's just a wait and see. I'm definitely holding stocks. I'll stop sharing. Definitely holding stocks. And in fact, some of them I did move my stop losses up last week because those shares had moved up. So it meant that I could increase my stop loss. Some of them aren't in profit yet, but that is the idea, is to, as they increase, move my stop loss up, and hopefully they will end up being in profit. But because of where that market is looking at the moment, doesn't mean I'm looking for any new buying opportunities, just sitting with what I've got and monitoring those. So I hope that's helped. Now on Thursday, instead of doing a share and review, I'm actually going to show you what I was initially taught a number of years ago around looking at the fundamental analysis on a particular company. And I have, for that purpose of that recording, I did choose Mercury Energy. So come back, have a look at that. I hope it helps with your investing, especially if you're looking from a fundamental basis. It's not something that I use now, but certainly trying to show you around Yahoo Finance and where you can find a lot of this information. But hey, if there is anything that you want to know in regards to share trading, share investing, that sort of thing, by all means, reach out. Happy to help. It's something I'm deeply passionate about and have been doing it for a number of years. So really keen to help you on your financial journey as well. So until next week, take care.